Heidi, hey guys. Having a little bit of a technical issue here with the software. I'm hopeful that now it is fixed up and running and that we are indeed streaming live to YouTube. If that is the case, I'm just checking on that. A little bit frustrating. Okay, it looks like we're good to go and okay, but my screen keeps disappearing, which is mighty frustrating, I've got to say. Let me see if we're still there. Mm-hmm. The blue circle of death remains. And I think we're back. Just give me 2 seconds, guys. One, two, three. Hello, hello, hello. Okay, yeah, looks like we're live once again to YouTube. So here we go. Welcome aboard. Great to have you with us for this week, which is, of course, the first week of December, and getting very, very close to that jingling time. Jingling, is that what I meant to say? I don't know what I meant to say. Dingling. Perhaps Christmas is what I'm alluding to, of course. No Ash this week. He's flying, I think, as we speak, on his way to Singapore, or he's in Singapore, one of the two, and he may pop in at some stage, but we will be pretty much footsieless, I think, for most of the week. Hi, Lewis. How you doing, mate? I've got a few things. It's Monday because and Monday's not my favourite trading day. I don't trade the first candle of the session anyway. But let's take a look at the pound, shall we, and see how our first candle of the session is looking. Those of you who don't know, we're working on it's a time honoured strategy, to be fair. And what we're looking for here is the previous three candles, or at the moment, the current three candles on pound US dollar. Hang on a second, I haven't updated my screens from last week. And what we're seeking to do here is find the range of the last three candles prior to open in London session on the hourly chart. So let's zoom in on those. My goodness, that's loud. There's the high, clearly, we know that. And the low of those three candles is going to be 1, 2, 3, right there. So what we've come to conclude thus far is that we'd like to put our entry either 5 or 10 pips above the top of that range, and probably 5 pips below the bottom of that range. Again, it's the three candles, the three hourly candles prior to London Open. So there's 1, 2, 3. So that's the range. We'd be looking to place an entry, let's say 10 pips above there, which is 129.27. We'll go 129.37. So around about there, let's say, and 5 pips below the low. So that is 29.11.3, 29.06.3, or thereabouts. Will be close enough. Okay. So there's our entry short. We'll make that red, and we'll just make it a dotted line, I think. Put that back to there, that to there. So that would be our entry to the shorts, and our entry to the long would be this line here. And we'll make that green. Okay, there we go. I think this did okay last week, guys. I'm just trying to work out Fridays. Of course, I'm not around on Friday, so I don't know what happened. It is the. If I can actually see my chart here, and then I'll just get rid of this control panel so I can see. Right, it's the 9 o'clock candle that we're looking for on my charts. So the 9 o'clock candle here would have been it's all showing me 1300. Am I frozen? What's going on? 10 o'clock candle. That's the 9 o'clock candle there. So we want the low of that there. We want the high of the last three bars, which is there. So we would have been triggered short. And if you're wise, you would have taken profit before the weekly pivot. And I think we're looking at 3 hours anyway to get out. So 1, 2, 3. You might have just, if you'd taken profit here, you would have had a win, but it wouldn't have been substantial. And of course, dependent on where you got out, we're looking at 3 hours. I think that's the one that we've actually decided on. That one would have been a small winner, I believe, on this one here. That's the 8 o'clock, that's the 9 o'clock. So high here of the previous three bars, 1, 2, 3. Low is here, so you get entered on around about where price is. I would imagine that would have turned out quite well. Again, taking profit at the weekly pivot. That one worked fine. We know that one the day before worked well. How about this one, the 9 o'clock bar, which is that one? So entry be under here somewhere. That would have worked well also. Looking okay so far, this London Open strategy. So we might continue to keep our eye on that. You could also use the bar itself, so the previous bar. On this occasion, that would be pretty much the same range, a little bit different. The 9 o'clock bar over here, I think, was different. Again, that's the 1 o'clock bar. Why is it showing me that? That's the 10 o'clock, that's the 9 o'clock. Would have worked out even better, wouldn't it? You got better entry there. On this one, that's the 9 o'clock bar there. Again, could have used that. Wow, that would have been a beauty, but we're talking 3 hours. So 1, 2, 3 would have been out here. Same over here, 1, 2, 3 would have been out there. So far so good, guys. And if you want to back test that, then I recommend you do so. It is a time-proven strategy, and I used to trade it all the time, and I don't know why I ever stopped, to be fair. But let's keep our eye on it and see how it goes down the track. You could also use any pound pair, but for the purposes of this test, we'll just continue to use pound US dollar, I believe. So that is that one. Couple of trades that we entered not quite correctly, actually, over Thursday, Friday. I was talking about these in the Strategy Leader coaching, I think, on Thursday evening. There were 3 trades setting up. This was one of them. It was euro dollar long, and that was a clear false break of this trade line, clear false break of the bottom of the range. So break, consolidate back above, retest. So entry above that bar there. That should have expired, actually, because my rule is that I cancel trades 6 candles after the master candle, that being the master candle. So 1, 2, 3, 4, 5, 6 shouldn't have been triggered into that trade. And I didn't check it until the market had actually closed on Saturday morning. We're just in profit on that. Not sure why that bar very, very late on Friday or Saturday, Saturday morning for me, why that reacted as it did, but it took us into the trade, and as I say, we're just above entry there at the moment. Look, I'm not too fussed. I'll keep that in the market. I haven't got a massive amount of money involved. I think the monthly pivot is probably a nice little target here, but we've got to break through the top of this range, of course. That is the first consideration. Whether that's up for that, I'm not 100% sure, but let's hang around and see if that can be the case. The reason I traded it was the false break after really we had a double bottom sitting here. That's been taken out. That's not such a bad thing, because really what's happened here is the market's found a little bit of liquidity, and there it is. You can see it in that bar. What do I mean by that? Well, I mean, if you were long here, you would have stops right here, and those stops would have been, pardon me, would have been triggered by this bar here, and of course that provides the liquidity to go up. Not a whole lot's happened since, I'd have to say, and of course we are in Monday, and Monday is oftentimes a very, very slow market in any case. Let's take a look before we move any further at what is likely to happen in news this week. And there is a fair bit about. So let's take a look at the Forex Factory. We already had some Aussie news. It's a big Aussie news week, as it always is at the beginning of the month. I don't appear to be sharing Forex Factory. No, I do. Okay. And it started off this morning with building approvals. Very poor number, one would have to say, and that shouldn't have helped the Aussie, but the Aussie has actually appreciated since that number was posted. Company operating profits also not so good. In fact, you would have to say they're poor. It was a miss to the downside, but very, very poor on the previous, as was the building approvals. The Cakeson number, which is Purchasing Manufacturers Index, out of China, a little bit of a beat, but nothing to be excited about there. Big news today is that we have Christine Lagarde speaking at 2 p.m. Greenwich Mean Time, which is now around about, what time is it there? Let me just check that. It is now 8:08 in the morning. I shouldn't have had to check that because we're in London Open. So we've got around about 5 hours and 51 minutes and some seconds before that speech takes place. That's going to affect the euro today, I would imagine. This is her second speech. This time it's testimony to the who's she testifying to? The European Parliament. Oh, nobody really. So that will be a headline act for the day, one would think, and the euro is likely to move a little bit on whatever she has to say. Because it's a testimony, then there's obviously going to be a lot of questions asked of her, and I would suspect that they'll probably prize something out of her in regard to what she believes is the new direction for the ECB, and that, as I say, could well move the market. So it may be a little bit volatile around that area. If you're in a euro trade, which I am, I might need to be looking at that time of day with some care. That's probably the headline act today. Tomorrow we've got RBA statement, and that will be the headline act for tomorrow. On Wednesday, we've got the Canadian equivalent of that, the overnight rate. Not tipped to move either of those. The Canadian at 1.75, the Aussie at 0.75. Should tell you something really in terms of interest rate differentials. And much will depend on what these statements say, Aussie and CAD. I'm a bit of a fan on Aussie CAD short, so I'll be watching that with interest as well, in particular the RBA statement, because it'll be a big lead into the BOC statement. If I can find a way in there, I shall, and I'd be happy to get into that prior, the Aussie CAD short, I do believe. What else have we got? We've got, of course, OPEC meetings all week. That'll affect the oil prices, one would think, and used to be the biggest number of the month. To me, not so much these days. I think it's pretty much I won't call it a non-event, and certainly if there's a big miss or a big beat, then yes, the dollar pairs will move. But I'm talking about the NFP number, of course, which comes out on Friday. So there is a bit to take notice of. In particular, the Aussie and the CAD, they should move a little bit. And as I say, I'm going to have a look at that pair very, very shortly and give you my opinion on what can be done to trade that. All right, so I've said we're in the euro long, and I'm okay with that. If we bounce off the top here, then I'll probably look to move my stops pretty tight on that one. Stops currently down around this area, which is kind of in no man's land, I'd have to say. But we do have the bottom of the range, the trade line, and the current daily pivot protecting that stop loss. So I guess it's in a reasonable position. The other trades that I'm in, Euro CAD, we're still in that trade, have been for the longest time. This is a very long time to be in a trade for my strategy. Just hold on, I suppose. You know, unless you're sick of being in this trade and just want to get out, then just hold on. We can only win We've got our stops at entry. We've taken profit at just above the monthly pivot. So it's all good, but hellishly boring, just completely boring. Again, the CAD news on Wednesday is going to have a lot to do with this pair, one would think, and hoping that will be good news, and we'll see not only Aussie CAD falter, but also Euro CAD. But anything could happen here. Prior to that announcement, I'm happy to hold the position, however. And that said, if we do get another lower high here, that's the daily chart I'm looking at, so this could happen on any time frame. We're bang on the monthly pivot, so if we do get a lower high here, that candle there might have been interesting as well. You can see the pivots have closed up pretty tightly because we are in a new month. We've got the monthly, weekly, and daily all in chronological order, heading south. So that's all positive, I suppose, for this trade. But again, leading into the news, it's a pretty tough call to be saying where we're going. The lower high here is interesting, however, if you aren't in the trade. Now, I did falter on Thursday, and once again, this trade I shouldn't have been in. I set an order on Thursday. The reason that I am in this trade is because I was slack, and I paid the price for that. Again, only small risks, so I'm not perturbed about it. But the thing to be worried about is I didn't get out of the market. I set the EA to manage the trade, but I didn't set the EA to expire at the right time, and for that reason, I've copped it. What was I trading? I can't even remember what I was trading, for goodness sake. It would have been on a smaller time frame. Got in there. I can't see anything here that's obvious, I've got to say, which is kind of weird. But again, the order should have expired as it should have on euro dollar. Just having a look here what I did trade. Looks like a false break on a smaller time frame. Yeah, I can't see it, guys, to be fair. Obviously, I was really concentrating hard on Thursday late, and that was one of those that just is crazy. I've got a trade line. There it is there. Okay, I've traded this bar here, so entry there, 1, 2, 3, 4, 5, 6, should have been out there with no trade triggered, but finally we came back here and took me into a bad trade, which is my fault entirely. I'm still keen to trade this short, however, and this is one of the setups that may well be coming in the not too distant future. You can see on the 4-hour chart there that we've broken this trade line. We're consolidating above it, and I'm quite interested in this because we have already come back inside this well, it's a range as well, but it's also a trade line. We've had a bounce off the monthly pivot, and this candle looks quite interesting to me. If in the next 15 minutes this candle were to close here, or even above the monthly pivot, I'd be happy to place this order short, and that's exactly what I will seek to do. Now, what would stop me here? There's absolutely nothing to stop me trading this short. I'd like to see it actually close above the monthly pivot. That would be my best option. But you can see what I'm looking at here. I'm looking at a clear false break of this trade line, and this candle gives me the opportunity to say, well, all right, if this is to be a false break and they come back to this area, they're going to take us down to here or here or here. So that's why I'd place my order there. I'd put my stops above the swing, and we'll see how we go. So that's plan A at the moment, Aussie Yen short, and it'll be underneath this candle. If this candle were to retrace and close less than half its body, all bets are off. I won't take the trade. Has to be a decisive buying bar before I'll take this order. But I'll come back to that before I close and give you my opinion on that. But it looks at this stage as though I will trade Aussie Yen short again on the hourly chart. Look, cable. Wow. Put in a nice lower high here. I'm going to stay out of cable this week. I think I'm just not that fussed on. Well, that said, I'm talking smaller time frames. If I see something on a bigger time frame, I'd be happy to trade it. But the smaller time frames, I think, are absolutely fraught with danger. And that said, I know I've got this. I haven't got a trade set. I've just got the parameters set right for this breakout trade. So I'm not keen to trade it on a smaller time frame. And the reason I'm happy to trade it on a bigger time frame is because if you take a look at what we've seen, and this, you go back as far as you like, this is still acting as technically well as anything on the charts. We're getting double tops and lower highs and lower lows. Bang, cop that. We're getting double bottoms and higher lows. Bang, cop that. Wow. What's stopping us trading this on the bigger time frames? Because it's doing everything it should do. On I won't even say a macro scale, but let's say an intermediate time frame. This is just the daily chart, but it's doing exactly what you would anticipate it would do. Once we get into a range, we're going from top to bottom to top to bottom to top to bottom. It's perfectly technically sound as far as I can see. But on the smaller time frames, if you go to the smaller time frames, like the 30-minute chart, there's where you're running into trouble because you've got this up and down motion all over the place, and the volatility is high inside of these daily situations. So that's why it's a bit tough. If you are going to trade pound, then my counsel would be steer clear of the smaller time frames, and minimum 4 hour, maybe daily, and just get your stops in the right place. And the right place looks fairly obvious to me on most occasions. So, yeah, whilst I say I'm not keen to trade the pound pairs this week, that is true on the 30-minute chart, but on the daily chart and the 4 hour chart, more than happy to do so. And I know that still carries inherent risk because we're 10 days or 11 days out from an election. That election, and that said, that election appears to be over now. We seem to have the news already that Boris Johnson is going to retain his prime ministership. The spanner in the works would come with the polls, of course. This week there'll be more polls, and if the polls suggest that there's something other than a Johnson win, then yeah, we're going to see something different. We're going to see the pound, probably down here somewhere, and that's okay as long as we're not on the wrong side of it, of course. From a bias point of view, I guess you've got to go with that Johnson win. I'll call it not a theory, but let's call it almost certainty. And I do add advisedly the word almost. So I guess you've got to have a bullish outlook for this. There's a very strong target sitting up here, and it would only take, you know, affirmation of the last poll that we saw, I think, to see this get up to here and get up to here fairly quickly. It's around about just under 132. So I see this breaking to the high side. Do I want to trade that? Again, not on a small time frame, but if there's a reason to trade it on the bigger picture, then that's what I shall do. You could argue at the moment that we've got a higher low sitting here, and my counter argument to that would be that we're also in a very congested area, and we're neither have we gone to the bottom of the range nor the top of the range on either the horizontal range, box range, or the descending channel. So to get some bang for your buck here, for mine, I'd really want to see a decent retracement, maybe down to the bottom of the range, maybe down to the bottom of the descending channel as well. What will drive that there is my biggest, I was about to say fear, concern, I think is the right word to use. I can't see what's going to drive this down here at this point. That doesn't mean it can't happen. Strong dollar news, for instance, can make that happen very quickly. Or, as I say, the the polls could suggest that we're having a turnaround. Who knows? And that's why it's very, very difficult to trade on the smaller time frames, in my humble opinion. But there is an argument that we've got a higher low sitting there, the bouncing off last week's weekly pivot, and potential entry there to trade the long. I'm going to resist that temptation, as I say, and wait till I see something from down below. That may mean I miss the trade, but so be it. Let's go to the Aussie now. The Aussie, as I said, I'm keen to trade the Aussie short against the yen and the CAD. I'm not so sure against the dollar. You could certainly argue, and I would argue, that we've been a very extended bearish. And I'm on the 4-hour chart here. You go to any chart you like. You could not deny that we've been in an extremely bearish mood on the Aussie for the longest time. But if you then go back and have a look at, well, just this year, I suppose, yes, we've gone down probably 300-400 pips, but we have found a very strong base here in the last 4 or 5 months. We're now testing that base. Well, perhaps we're now testing that base again. We haven't quite reached that level. I see that level as around about the 67.5 mark, which is where I've got this black line. So I think to go long here for me is not the right option at this point. I'd much rather see it go down to this level before I considered trading Aussie long against the dollar. But, you know, I do have a very strong opinion that technically we are in for a visit here. So I've got that firmly in my mind as well. Time will need to get a wriggle on, or the market will need to get a wriggle on if that's to be the case, and find our way up here. It'd have to go there fairly quickly, would it not? That's without doubt. What could drive that? Well, we've got an NFP number coming up, I suppose, on the weekend. We've got Aussie interest rate tomorrow. We've got the opportunity for the RBA to say, okay, the monetary easing policy is over, and we're now looking at tightening, maybe as early as next month. Well, that would do the Aussie no harm. Am I saying that's going to happen? No, not by any stretch of the imagination. But that's the kind of thing that could drive this up here very, very quickly. And again, I'm not saying that's going to happen. And then, of course, you've got NFP at the end of the week, which, if it was a shocker, then, you know, it can happen. And the one thing I guess I've learned over many, many years of trading is that don't think for 1 second that the market can't turn around on a dime and go to places you don't even think of when you're looking at intraday charts. You know, down here, you're not thinking of 70.81, you're thinking of 67.90 or 66.90 or something like that. You're not thinking these numbers, but believe me, they can happen very, very quickly. And well, there you go. There's an example of that right there. If we were to see that happen, then bang goes your mangoes. Away we go. I remember this. This was a fake news coming out of China, and all it took to move the Aussie down to there was that fake news. And it was all about somebody said that Chinese had banned Australian ships from landing in strategic ports. Well, what a lot of hoo-ha that would have been anyway, because the major trading partner, in particular in raw materials. So why on earth would they stop raw materials landing in China? That didn't make any sense at the time, and the market soon saw that. And in the space of, what chart am I on? Weekly, probably. In the space of a very short period of time, let me actually go back to that. No, I won't, because I'll get lost in the charts. But in a very, very short space of time, it was less than a day. You know, this moved that 400 pips and went straight back again. So that's my point. Don't think that can't happen. That can happen, and it can happen very, very quickly on a very short notice. So I definitely see that, but I still think there's maybe a little bit left in the Aussie to go short. Am I willing to trade that? Probably not at this point. So I think short to get long is probably where I'm at on the Aussie for now, and not because I'm an Aussie bull. It's because of that big target that I see up there, and I see that the Aussie is trying to get up there. I sense that there may be some dollar weakness coming, and that's probably the reason I'm thinking Aussie dollar long rather than Aussie strength. Definitely want to see it come back to this level and give us a higher low before I get into the market, that's for sure. Now, I was extremely bearish on Kiwi US dollar at the end of last week and Kiwi CAD, and I'm going to talk about those now. Why? Well, because of market structure, really. And that market structure was telling me that on the daily chart, we were very much in the very best part of the sentiment cycle, which I'm sure if you've been in the room for the last couple of weeks, you've heard us talking about the sentiment cycle. Well, we've come back to match that level again. So I'm actually on full alert here. I know that the Kiwis had some very good news, and that's what's driving it up at the moment, in my opinion. But gee whiz, all that this is serving to do for me is giving me a better price to trade it at. If I see this candle like this tomorrow morning and not up here, then I will place an order short underneath it for sure. That will be definitely one of my trades for the morning on the daily chart. Would I like to trade it earlier than that? Yeah, I don't see why not. Do I want to trade that candle? I could. I could trade that candle short, but I think again, risk to reward here is very, very poor. And I know it's not going to be superb on the daily chart either, but the benefit you've got of trading the daily bar is if you want to trade this bar as a master candle, you'd have your stops here. That would be foolish, in my opinion. So you might as well wait till the daily bar closes. Use the swings or the new high if it makes a high. Put your stop above there and your entry down underneath that bar. So that's kind of plan A for the morning. That's what I'll be looking at. It'll be Kiwi US dollar short, but if I see this retrace again, if it retraces beyond 50% of its body, then all bets are off. I won't be trading that. I would wait till we got back into this range then and saw a lower high before I traded it. But if this looks even remotely like that, definitely I'll be placing an order underneath with a stop loss above the swing. Kiwi CAD doing exactly the same, or has done exactly the same thing, and on the daily chart has broken that range beautifully. You know, it's absolute corker of a move today on the Kiwi pairs because of that news, and same applies here. In fact, I may well split these in terms of risk and place my entry underneath that candle with a stop loss above the new high, which of course we now have. Why am I thinking sentiment cycle? I'm thinking long here ultimately, but the long comes from not necessarily on Kiwi CAD, but on Kiwi US dollar. The long comes from down here somewhere. Here's where I'm looking to trade long. Obviously, to get that trade on, we have to get price down to here, and this potential false break of this range is exactly what the doctor ordered for me. So again, I'm very, very keen on both of those. Kiwi dollar more than Kiwi CAD, but I've definitely got an eye on Kiwi CAD as well. Speaking of CAD, as I said I would, we have got right now a false break scenario on Aussie CAD on the hourly chart. I'm just going to check the 30-minute chart and see if we can trade that now. Just hang on 2 secs. 30-minute chart is a-okay. So we can place a short here right now if we so choose. I do choose, and I will be doing that. Let me give you some levels here. I can't see any point in putting my stop there, so I could either put my stop here or I could even put my stop here. I think that's a safer place to put it. That'll be about a 13 pip stop loss, and we've got to take profit at just before the daily pivot. It'll be about 0.5 to 1, and I'm okay with that. So let's place that order. I'll put it on here. Now, for you guys and your lot size, I'll leave that entirely up to you. I'm going to place this at around about 0.25% for me. So that's about half a lot on this account. Maybe one lot, actually. Let's go one lot on this account. And we will make it a pending order short, and it will be underneath this candle. So the low of that candle is 0.8996 will be our entry level. $0.8996. The stop loss will be, as I said, last month's monthly pivot is there. Can't see the level high of that bar. Is 90.08. And I'll just get this right. So last month's monthly pivot was at 90.09. We'll go 3 pips above that. We'll call it 90.012. There we go. 90.012 is the stop loss, and it is a sell stop. There we go. Orders in the market. Entry here underneath the bar, and stop loss above these swings here. I think that's the best place for there. In terms of take profit, got to get out just before the daily pivot. I would say that level needs to be around about 89.89 to take first profit, and I would recommend taking about half off at that point. Targets, let's go a little bit wider for a target, and a little bit wider still. That looks okay. So 89.68 will be your target, which will give you, what was our risk? Yeah, about 2 to 1 on the risk factor, which will give you a little bit better than 1 to 1 on the slingshot method of taking first profit at just above the daily pivot there. So that is Aussie CAD, and it is a short order playing again a false break of this resistance trade line area. So that's that one. I thought I had another one. Did I need to check on? Let me just squiz at that. Wasn't Euro CAD, was it Aussie yen? Yes, it was. Okay, so that again is the hourly chart, and we'll take a good look at the 30-minute chart to see if we've got an opportunity here as well. It's pretty much the same trade, but let me have a look at the reward to risk available here. Entry there, you've got to get your stop above the high. Is there an obvious swing now? Is the question. I think the answer to that's going to be no. So we've got to get our stop above there. So you'd be entering there, you've got to get your stop above here, so about 24 pips of risk. Yeah, you've got 0.5 to 1 before the daily pivot, but then you run into a swag of support, and that's going to be the issue here on Aussie yen. I'm inclined to wait on this one. I'll see what the hourly candle looks like, and if it's the same, then maybe I'll take that. but it's going to be a similar trade to what we've just placed as well. So look, I'll leave that up to you guys. If the candle looks like that, it's the same scenario that we're trading, or that I'm trading on Aussie CAD, and it's probably going to result in the same trade. And I think I'm prepared to leave Aussie CAD as a better option than Aussie yen. But if you want to split the risk over those, then I could certainly think of worse things to do. It's exactly the same scenario, right? We're playing false break. This one probably before this monthly pivot break looked even a lot better because there was the resistance being offered by the monthly pivot. If that holds again as resistance, so if this candle closes below, then that's probably a reasonable position to take. So, but do split your risk, because essentially we are looking at the same trade, Aussie yen and Aussie CAD. I'm going to look at one more, guys, and then I'm going to bid you adieu. It is Euro yen. Now, the reason I want to look at Euro yen is because I'm a big fan of the yen at the moment. But when it kicks into gear, timing on this is crucial, as always. Timing is crucial. What I've seen disappoints me a little bit, and I'll show you for why. Again, I was very keen to get short this cross. Stop doing that. There, grab it. Because we just couldn't come back into this range. We broke free of it. We broke the monthly pivot, retested the monthly pivot. We did that again after coming off. Not that we broke the monthly pivot a second time, but we couldn't get back inside this range we have now, which is, as I say, disappointing for me, because I still wanted to trade this short. That makes it very difficult to trade short now, because we have come back inside that structure. The issue I've got is we came off the top of the ascending channel, failed to make it to the bottom of the ascending channel. What happens next? Well, I think we've got to either one of two things. We can trade it to the top of this range again and maybe leave something on the table in case it breaks to the high side and tests the top of the channel again. Or we can, if we miss out on that and we find that we get to here and play a false break, again looking for the short. I'm still of the opinion this can break to the low side, and I guess in many regards the higher this goes, the better I like it in terms of price. What I'm struggling with is how we find our way back in until we get up to here, and I think we've got the right to trade it long here back to this level, but I definitely need to see a pullback to the pivots here. So I can't do anything on Euro yen until we do get that pullback. I don't even want to trade it on a smaller time frame back to that level. I don't think I do. Let me see if I can identify another range or another structure that we can actually attempt that on. And really, I can't. There's no structure here that says to me, oh, maybe there's a little channel in there. I don't like it too much because we've gone a fair way without testing it. But let's have a look. Yeah, not a massive fan. Not a massive fan. So no, I don't really see a good market structure there that we can actually trade it with. So I'll let that one go. But it's still on my radar, definitely on my radar, because I do see this big channel sitting here, and it's telling me it's going to break to the low side at some stage. Why? Well, because it's a retracement on all of this big momentum to the downside. That's why. So I definitely see this breaking down here, and shooting around to 110 or something of that nature. So that's why I'm on full alert for this particular pair, Euro yen short. I just cannot find the right way in at the moment. As I say, let's trade the bounces off the top and bottom of the range until we find something that really suits us and get into that short. So, guys, that's pretty much me for the day. As I say, Ash not with us today, and potentially not for the week. I'm just not sure whether he's going to be able to tune in at some stage. Hopefully, he can, and we'll do our thing and have a chat to him about the footsie. What's the footsie doing? Yeah, not too much. Going up and down in the one spot there on the daily chart for now. I mean, he finds his way into these trades. I know, but for me, I don't see anything there. And I'm not about to commentate on the footsie because I know very little about it. To be fair. So, guys, thank you for your company, and we will catch up again tomorrow. Hopefully, with some money in the tank on either Aussie yen or Aussie CAD, either of those, but keep your eye plastered to Kiwi US dollar and Kiwi CAD again. Be both the same trade, so split your risk on those. But if I do wake up in the morning and I see something like this, immediately I'll place an entry short underneath and my stop above the swings exactly the same on Kiwi CAD. There you go, guys. There's a bit to think about and chew over overnight. We will catch you at the same time tomorrow. Have a great rest of Monday, and yeah, great week to you too, Lewis. And bye bye for now. Have a good one, guys. Cheers, Daniel.